Evolution of the IASC into the IASB and the challenges it faces. The IASC is the International Accounting Standards Committee, which existed from 1973 until 2000 and was succeeded in 2001 by the International Accounting Standards Board, the IASB, which is still with us. First, let's discuss some of the background to the founding of the International Accounting Standards Committee. Each country at that time, and really for many years afterwards, had its own national GAAP, if indeed it had a national GAAP at all. And there were different cultures among countries. The Anglo-American countries had their own culture, such as the UK, Canada, the United States, Australia, and New Zealand. They had well-developed capital markets, and their financial reporting was attuned to the needs of investors in capital markets. On the other hand, on the continent of Europe, there was a totally different culture. There were indeed capital markets in most of the countries, but rather than relying mainly on the capital market for financing, most companies relied on banks, family, and the state. And consequently, most of the candid reporting was to insiders, not to outsiders. Published financial statements, for example, in Germany, were very much driven by the income tax law and by the need to determine how much of a dividend must be declared each year, which usually was a percentage of reported profit. A very different culture than the kind of culture one associates with the Anglo-American countries. Most of the reporting was to creditors rather than to investors. Now, with respect to developing countries, if they had a national GAAP at all, it may well have been inherited from its former colonial masters, such as the UK and France. And so therefore, it was very difficult to draw comparisons between financial statements prepared in different countries. And then in the 1960s, there was a wave of cross-border corporate mergers and acquisitions, and the consequent extreme difficulty in comparing financial statements from one company or another. And therefore, there was a need expressed for some improvement in this area. And then in 1973, the UK entered the European Economic Community, which is today called the European Union, the EU. And back then, the European Economic Community was in the process of developing two major directives that would have to be approved by the legislatures of all the member states in order to try to bring closer together the various national gaps within the community. But it was dominated by the German system, the very legalistic system. And so when the UK entered the EEC in 1973, it felt it was very important to give greater prominence to the Anglo-American approach toward reporting to investors in capital markets. Consequently, in the same year, Henry Benson of the UK founded the IASC, based in London. Now, the IASC was a part-time body of three-person delegations from national professional accounting bodies in 9 countries. The UK, Ireland came in as a unit, France, Germany, the Netherlands, United States, Canada, Mexico, Japan, and Australia. This was a novel enterprise because up to that point, accountants forming standard-setting bodies in different countries were dealing only with their own countries. Nobody had ever attempted to develop standards across borders, that is to say, internationally. And it was therefore a learning experience for everybody. The aim of the IASB was to harmonize accounting standards worldwide, to bring them closer together, to eliminate unnecessary differences in accounting practices. It had a slender research staff. The standards, of course, were voluntary, requiring a 3/4 vote in favor, and this meant it was necessary to engage in a great deal of compromise which meant that a lot of countries wanted to retain the accounting practices that were already widespread in their country and did not want to see them sacrificed by having an IASC standard issued without recognizing their own practice. They were to be basic standards: disclosure of accounting policies, inventories, consolidated financial statements, depreciation, accounting for research and development, and accounting for income taxes, among others. Now, the first period that we're going to look at is from 1973, the founding year, to 1987, which, as I indicated before, was a major turning point in the history and evolution of the IASC. During this 14-year period, the IASC issued 24 standards with multiple optional treatments. Some treatments were eliminated, but for the most part, many treatments were still there. So there was, to a degree, harmonization. The standards were adopted mostly in developing countries. Among the member bodies, Canada was the most enthusiastic of all the members and went the furthest to try to encourage their corporations to adopt or at least adapt international accounting standards, IASs, what the standards were called, issued by the IASC. New Zealand was an interested party and adopted several of the IASC standards. Elsewhere, Malaysia, Zimbabwe, and Malawi relied very heavily in its standard-setting process on the IASC standards, and Nigeria and Kenya used them as a base for their own standard setting. So in a number of developing countries, there was either adoption or adaptation of international accounting standards, but little interest otherwise. The FASB, the Financial Accounting Standards Board in the United States, and the European Commission, which is the administrative body of the EEC based in Brussels, both ignored the IASC. The FASB was interested only in US GAAP, and the European Commission looked down on the IASC as a private sector boys' club that was interested in feathering the nests of private sector enterprise and didn't necessarily have the public interest in mind. During this period, the IASC expanded its membership to 14 delegations because in the early years, a number of other countries joined as associate members, and all of the members and associate members had agreed in writing that they would use their best endeavors to gain acceptance for the standards in their respective countries. And so among the new delegations that were added that led to a total of 14 delegations were South Africa, Nigeria, Italy, Taiwan, and a delegation of financial analysts. The South African and financial analyst delegation stayed on till the end of the IASC. Other delegations rotated on and rotated off to have a larger sampling of worldwide interest. And so there was a considerable difference in the composition. Now, this presented a bit of a problem. With 9 delegations, there were probably something like 40 members sitting around a gigantic table, some of whom speaking in a second language, especially problematic with the Japanese, who did not have very good English-speaking skills, but even for the Germans and the French, dealing in English on technical accounting standards was a novelty, and it was a challenge. But with 14 delegations, the size of the table was larger, and one talks about 55, 60, or 65 people sitting around a very large table, trying to deal with technical accounting problems, sometimes in their native language, sometimes in a second language. It was not an easy process. Nonetheless, some 24 standards successfully were issued. Now, the major development that occurred in 1987 that changed the life of the IASC was the intervention of a body known as the International Organization of Securities Commissions, called IASCO. IASCO was formed in 1983 as an international federation of securities market regulators around the world. It is still in existence today. Originally, its base was in Montreal. Today, its base is in Madrid. and that continues to be a force in international financial reporting and auditing. In 1987, France's Commission des Opérations de Bourse, which is its stock exchange regulatory body, the COB, and the Securities and Exchange Commission in the United States energized IASCO. It wanted to use IASCO as a way of improving securities market regulation around the world. The SEC was particularly concerned about insider trading, and they were also interested in improving the quality of financial reporting standards. And as a result, during the first 14 years of the IASC, while the FASB paid little, if any, attention to it, the Securities and Exchange Commission was sympathetic to the effort. And so by 1987, the SEC, together with the COB, felt that they could work with the IASC to improve the quality of its standards such that one day the SEC might accept them for public trading in the United States. So in 1987, IASCO began working with the IASC to eliminate accounting alternatives, of which there were still quite a few, provide for more disclosure and detail, and expand its coverage of issues. And in 1987, the IASC launched its comparability project to remove alternatives, completed in 1990, and with the help of IASCO, it achieved a considerable amount.